Hello, this is just an update on my Nasdaq future play. I've actually, what I did is I have my original NQ future option plays, and what I did is I did a short-term one. I initiated yesterday, and this was kind of risky, but I still shoot it for the $200 profit, and we're making 150 of the two. But this is the longer term one. We're actually losing 32, but we still have 7 days out. But I can go over all of them, and I'll show you that we're pretty much safe except for these two bottoms. I try to do like a gamble on the GameStop play, and then a TDS play is probably going to be losing. But anyways, let's go over the. I'm going to go over the my main play, my main weekly play. I usually do the NQ credit spreads on the call side, and we see my main plays are here. We're selling a we're selling a 12,420 and buying a 12,550 on the December 16th and then on the December 19th we're selling a 12,500 buying a 12,700. And these two plays have a combined credit of $445. And you see we're not really collecting anything. We're losing now, but since we're still way safe, we're like 10% in the money possibility. I mean, let's just say we're 90% probability of making a profit on this. So, but it's not it's 90% of I mean, theoretically it's 90% of this, but it's just all math. It's not really practical. And then my short-term play, what I did is on the NQ. This was a sort of risky play. I put it in yesterday, and it's looking pretty good. It's one standard deviation out. I sold the 11,770, bought the 11,810, and I got a $210 credit. That means right now I'm making $159 since yesterday, and I can show you the play, the timestamp that I actually made the play. Here, I'll show you 11,740 we're looking at. Here's the activity. Where's the 11,740? Yeah, here it is right here. Yesterday at 6:52 a.m. So it's been a little bit over 24 hours. And then I made these game in AVG. I'll go over that later, but okay. And this is a super bang for the buck. And the reason why we're making money, we're making $163 of the 210 is because the stock market is going down right now. So, and I think it's not going to go back up past the high of the day. So I think we're pretty much safe on this. I think we're pretty much sealed the deal on this NQ. I think I'm just gonna let it expire. I mean, I'm gonna just not touch it. And a short position means that you don't have to touch it. You just let it expire, and you want it to actually go down to zero. I want this one to go down to zero. No, this one here. Where is it? Yeah, the short one. I sold this. And I want the 460 to go down to zero, and right now it's it's looking pretty good. Yeah, and then the Broadcom. I made a plan. Broadcom, AVGO, and what I did, I was doing the earnings play. And this is probably going to work out, but I did a week out, so we're still not going to capture the profit yet until, because I sold a 565 call right here, so I'm thinking that it may not go up within the next 7 days. It may not go back up to 556. But what I do is I always keep this on my monitor, And right now, this play is losing $75, but we still have 7 days out, so I'm not even worried. I'm not even going to look at it yet. I just watch it, and I watch the chart to see if there's any patterns or any news comes out. But I'm still not worried. We're still going to we're going to probably collect a credit profit on this. But I got a $195 credit, meaning I have a possible $195 profit, but it hasn't realized yet. So we still have another, I think over the weekend it will start creating a profit. The GameStop, I try to do like a FOMO play. I think what I did is I originally bought a 22 put, but then I modified the bet to where I just sold some couple to earn some money back. So I got $210 back, but we're only making $40 of it. So I'm gonna wait within the next 7 days. Yeah, I'm thinking within the 7 days, this put will eventually lose value over time. The only reason it won't lose value is if it drops below 22.50. So. But I'm hoping this is going to be a losing trade, but I'm recovering some loss from earlier. Because this total play on GameStop cost me $56, right? But originally it cost me like $100 and something. But I sold some puts to recover some of my loss. So now I'm just waiting over the patches of time. And if you look up theta on the Greeks on the option chains, you can define theta, and basically I want time is on my side because I want this to eventually lose value. And the TDS is just like a lotto play. I'm just seeing if it might go up to 10. It's over 10, but I want it to go like 10 to 12. There's no activity on it. Has no volume at all. It has volume on, let's see if we do volume. Oh, there's volume right there. Yeah, see volume, there's zero volume. So this is essentially a dead horse. But I like the open interest parts because there's 900, and there's like, so I'm theoretically either somebody's selling puts or they're buying a 900 put, thinking that it might go down below 900. But the only reason I got into this is because it recently had action yesterday. It went down massively yesterday, and I think I bought it when it's down here, like right here or so. Yesterday, was it yesterday? Yeah, this is yesterday. So I was buying it when it was going down, probably right here, about right here. I probably bought it right here. Then it went down even further, and what I did is I bought one thinking that it would go back up again. So it's up a little bit, but it's almost back to where I bought it. So basically, we're not even making any money. We're losing $6 of the $56 cost. So it's cool. We're only losing $6, but I think this is going to be a total loss. So it's just a gamble, basically a gamble lotto play on this. I always make a lotto play. Anyways, that's the wrap up. My overall wrap up is Nasdaq 7-day DTE. The Nasdaq future 0 TTE, it's going to expire today. We're looking very good. We're making 176, and I think this will eventually make to $200. And the stock market, I think, is not going to go back up to the high of the day. Basically, we still have about 2 hours, 2 to 3 hours left in the day. So I think it probably will not go up. So I'm almost not guaranteed, but there's nothing 100%, but it's like 90 something percent that I will collect the $200. And it was like a 26-hour play. So my ultimate goal is I've been making my goal like 150 to 200 a day, but my ultimate goal is to be consistent enough to always make that and possibly make my short-term goal by the end of the month is maybe 300 a day. So that's it. And then next year is gonna be wild, man. Even next week is gonna be wild. So I might even double my P&L by next week, but I'm playing super safe right now. What I call super safe, why it's super safe is because I'm selling calls way out of the money, where there's a lower probability that the stock will go this high, and it tells the statistics right here, 8% chance that it will go up to here. Or if you go the opposite, 92% chance it won't. So, and that's the light bulb, in terms of the light bulb going off of actually not necessarily, you're just basically, it's called selling. You're selling calls and they're selling puts to other people, and that's how you make your money. And then you have the time, the passionate time where all the option contracts eventually become worthless, at least the ones that are out of the money. And out of the money means this is the upside. That means these are all out of the money. And if for example, this option strike, if if the price of NQ is not at this price by December 16th, this will become worthless. It will be worth zero. But right now, this one particular one, this is click on one. This one is particularly worth $1,400 right now. So in the next 7 days, this, if it doesn't reach to this price, this will be worth $0. Right now, it's worth $1,400. So it's hard. It's kind of hard to imagine that something that has this value and it's going to lose value, and within the next 7 days, it's going to lose $1,400 in value, and that's the goal. What you want to do is sell this to somebody else, right? I'm selling this to somebody else, and then I'm buying a spread to reduce my exposure. So, for example, if I sell this, it's going to cost me $17,000. But if I do a spread and buy something further out to cover myself, it's only going to cost $1,500. And if it doesn't reach this price by December 16th, I'll be collecting the $480 if I make this bet. But I would not make this bet because it's too close. It's too risky. So theoretically, if I wanted to bet this play 7 days out, I'd go way out. This is the reason why I like this platform, is you can just click down and go out. And then I see the in the money. This is not the only reason, but I tend to always go below 10%. So like here's a 10%er, and see, like I've already made a play here. But let's say if we're making a brand new play, I'll look, and then my profit target is $200. So if I were making this play right now, I'd probably make it right here, collect a $220 credit. But we're going to need about $1,400 in our stock account, in our margin account. We're going to need this in our account as backup, but we're going to immediately collect the $200. So, all right, that's it. I'll talk later. Bye.